All right, GDP in about 7 minutes here. Friday, January 27, 2017. I want to start off first with yesterday I talked about, or the original trade went on with gold, okay, and basically just sold a vertical on here. Sold it for 30, and the target was 8 cents. It's trading at 6 cents now. I got out yesterday at 15 cents just to kind of prove a point or whatever. In gambling, you always have to have a little bit for tomorrow. So in this case, you were given a 30-cent credit for a 50-cent spread. Okay. It dropped to 15 cents and it covered on it. Okay. Then depending upon your commissions, you're talking maybe $1 a contract, $1.50. So we'll say $6. So you grossed 15 cents and there was 6 cents in commission. So you're 9 cents with the maximum of 30. Okay. And it's trading at 6 now. But what I wanted to point out is that, yeah, you scored on it, but a third of your cost went to commission. All right. And that was in gold, and that was basically selling the 115 call and buying the 114 call. I just splashed something on there because of you had your maximum losses if this went to 50. Okay, right? Because it's 50 cents and you received 30, so your risk was 20 cents. So you scored 30, but it could cost you 20 cents. So you still have money for tomorrow, kind of thing, for the options. I'm not a huge fan of being long options or buying options. If I come in, it's usually in the weeklies or earnings, and I go against the grain, okay? Because that's the whole, you're swinging for the fences with these things, right? You want something, you want to buy an option for $0.10 and have it go to $1, right? Then it comes down to how many times, there you get 9 shots before you break even on the 10th, right? That's how you look at it that way too. Well, I guess commissions throw that in there. You buy it for $0.10 and there's 6 cents worth of commissions, put that in there. So I'm a huge fan of writing options. If you have a position, a lot of people get out of it at the first pullback, and it continues higher and you're like, whoa. But if you're long and you want to sell out, write some covered calls. If you're long, write some covered calls against your long position. You still hang in there and you collect a little premium. It's like selling insurance. I've been paying car insurance since Reagan, before Reagan, but that was the last time I actually had to file something. A claim, I think it's called, whatever. I don't know. It's been 30 years. 30 years of car insurance. Just right out the door, right? Okay, so I'm going to actually take this trade off. I don't want to buy it again. It's Friday. I don't have time to mess with this. Some of the other ones I put on here, I guess I'll start doing this for the subscribers, and I don't have to talk about any of it here. Like Comcast, I talked about that this morning on the free public video, that it's going into R1 on a weekly, and I look at it as, going against the grain, buying some puts as far out as possible. This is a fuddy-duddy account, so it'll fill me when it gets close. Is it possible for me to get 400 of these? Probably not, but I'm dealing with a different creature here. I have to put X amount of dollars to use, and that's what I'm working off of here. Logically, that's the next step I was a broker before, but I love the hunt. I love going through thousands of charts and looking at them, and a lot of it has to do with the psychology. It's what's between your ears. Everybody has a difficult time with up, down, and sideways. They have to put some more noise in there. Your eyeballs see that it's going up, but your ears hear that it's going down, and you're conflicted, and you freeze. And that's why you can have 99 out of 100 winners, and then that last one, you just ride it all the way into the ground and go bust. We all do. We all have. We all try to avoid it. But the key to this is actually having a plan. Okay. And so I'll get a little more giddy if the herd gets a little giddy. Look for something behind the scenes. Right now I'm working on a defensive / bear portfolio. Okay. So I'm looking that as we go forward and raise rates, eventually, right, we will get a recession. So, when the Fed starts raising rates, it takes about 36 months or so for the economy to crash. Will it crash? I don't know. It's definitely not going to be like 2007, but the stock market for real estate, but it's definitely going to, I can see some serious pain in the stock market. My biggest worry outside of the brokers who have my money, not have fiduciary responsibility and security of my funds, and banana heads out there. It's that we don't correct the last decade, we correct the last century. All right. America is kind of long in the tooth for the old empire thing. I think it's like 150 to 400 years. We're at 230, 240 and change for years. So and we're up to 84% service. But here we go. So what do I have going on here? I guess I'm shorting some Aussie yen up here. I'll have to take a look at that. That's basically a defensive move on the stock market. The Aussie's moved up for a while. And the yen, I kind of favor the yen going to 110 versus 120. So that's how I'm kind of leaning that way. But Comcast is basically it. I'm going against the herd at R1. The Q's been basically leading the market higher since '09. So I'm going at that. And you can see that I'm trying to go. Actually, I'm trying to get some of these off here. All right, I guess some of this stuff expires today. I'm going out as far as possible. I guess I skipped the currencies here. The Mexican, I want to be short this thing, and I guess I have some resting up there just in case we get some sort of, the first people that get in can't hold any type of pullback. And then VLP is another stock put. You can see I'm going out, March, May, August 17, X amount of dollars. Remember, it's a fuddy-duddy, but like I said, I'm doing something a little different here. So going through that and go through the charts here. As typical usual, here's GDP. Let's do this real quick then. I suppose we can leave gold on there. We're looking for gold in the 70s. We're about 10 off. What's that? Cocoa. And what am I looking for? $1. And then I have bonds too, but we'll just keep this up here for now. All right, take a quick look-see here. All right, I'll be back. Aussie dollar here, happy place. This is a bell curve, okay, of trading. This is I call the happy place. Those who are short are happy, and those who are long are happy. This is the happy place. This is money flow. Money flow is a little rich on here, so I took a defensive nature on this one. These are 2-day bars, okay, or candlesticks. All right, so a little on the defensive side on here. We saw that the dollar did come off, but it's not going below 100. We'll get to the dollar index in just a second here. All right, setting alarms. All right, just to notify me. You can set alarms all day long. You don't have to trade. Set alarms so you're a little vigilant. The blue one here is the ADX. Okay, it's an indicator to tell you if you're in a trend or not. It turns up from around 20, goes to 40. If it gets into 60, it's a persistent trend. All right, this is a little sensitive on here. Okay, but it's also 2-day too. So I'm looking for conjunction, and then there is another one in here wherever it's at. RSI. Little green guy down here, red guy here, but I have it hidden in the background here. All right, you can see it kind of come through down here. It's a RSI. All right, so running through here, defensive, you know, you're basically trying to buy the dip in the US dollar index. British pound. British pound, I want to be a dip buyer on here. I think the British pound at a 30-year low plus is probably going to be one of the better longs for 2017. I'm just using history from the 80s. Talked about it, one of my videos, about it doubling. All right, so we'll just go from here with the British pound. So basically British pound over euro. Money flow isn't in there, as you can see, not much interest, but we do have a double bottom. I'll lean that way. Heck of a move, 120 to 126-ish there. We're getting a pullback here, so maybe a retest of 124.90, you know, a little under 125. And then here's a reversal to add to longs. Okay. ADX is set for a trend here. All right, either higher or lower, it'll kick into gear here. From the sideways, you have a larger sideways pattern. What do we know about sideways? Something goes sideways, the trend develops. Okay, British pound, like it on the long side by the dip. Canadian dollar, money's in here, happy place. I did an 85 to 90, it did trade higher, though oil traded lower. Each market's on its own. There's no parlay thing, because oil goes up, the Canadian dollar must go up too. They can diverge, they can have their own. We can buy cheap oil from Canada, and Canada can have cheap oil problems, you know, so. Money flow is in there. As you can see, money flow peaked before. It was a high and rolled over. Money flow peaked high. Here it is again. Third attempt to try and get some. If it does go above here, then you have to lean long because of it's above the happy place. And ADX is kind of turning up. So I just kind of stand aside on this one for now. Euro, we're coming back off of this, possibly inverted head and shoulders here, got kind of a slant. I was looking for odds, 109, 111, 113 kind of thing. Happy place is 112. So maybe one more swing higher up into here, 109. Okay. If the dollar did pull back, but we'll see how it all pans out today. Remember, the United States closes out the week. So we will basically make the headlines for the weekend newspapers. I would probably say we'd see 109 before we saw par kind of thing. That's how I lean on it, on the euro. Japanese yen, looking for this to go the other way, to have the carry trade unwind. That's what I'd like to see in a perfect world. If it gets weaker, that would mean the US dollar yen would go higher. Off of this was the 124 call to 104, and we're bouncing off the bottom. So I'd like to see the yen come back through and trade higher. ADX turned down off this low, so the market's going to go at least sideways. You can see the RSI came out just like RSI here came out to tell you that you're above whatever 70 on here. What do I have these at? ADX is 10 periods, monkey bars, pivot points, scan levels, SAR, RSI 14. I guess I have it at, which is fine. It's okay. I'm just looking. You know, little dots, SAR. This is ATR for the stop, right? Average trading range, trailing stop, SAR stop. SAR is a nice one. Easy way of just drawing in a trend line. You cracked here, your short kind of thing, came back through here, you were now reversed. Came up and bounced right against it. What do you know? Triggered the computers. So now I prefer to be a dip buyer here, and especially if we clear the happy place on the Japanese yen futures. So I want to see this thing go higher. In a perfect world, of course. Mexican peso, the other one besides the British pound that I think will be a good long for 2017. Money flows out of it. ADX turned down, so at least it's going to do sideways. And save powder just in case we get something here. Those in the know are in this thing, but do they have the money to hold back on the first pullback? Okay, looks like gold went below 84. Kiwi bodies are in it. I like the Kiwi going the other direction, like IE50, IE35. I think that the stronger dollar, higher interest rates will force commodity prices lower. I'm looking for some sort of drought action 2018, 2019 in North America. So I'd lean towards the short side of the Kiwi. This is kind of a funky pattern. But yeah, long. I'm looking for the end game of the dollar because of being long biased since 2012 at 74. You know, we're at 100 here, so we're going to start causing problems. There's going to be a shift in once again in the economy, like this shift from out of oil, producing fracking coal and that, to building of homes. We're in the home building cycle here. And that should run until the early 2020s with one recession in there. Looking for a recession. That's the whole thing. You know, that's where I'm at. Recession trade is on since June 20th, 2016, pre-Brexit. Began to turn cautious. All right, so this is our Swiss franc. Swiss franc, anything up here, it can run to 102. Anything up here in the Swiss franc, I want to be on the short side of this thing. I think the Swiss franc overall in general, it went, 11 standard deviations above the norm, so it got way out of whack. The other one, too, is watching commodity markets. You know, we're doing the whole Switzerland thing here, which reminds me that UBS, any weakness on UBS, you want to be a buyer. Okay, so Swiss franc, you're looking for some sort of fresh shorts on here if it does come back up here. This is when they came off the peg. Okay, so I like the short side of this one. Look for my monthly weekend video and monthly charts that I went through from MRCI, from their link for free commodity charts. I ran through that. It's pretty lengthy. My opinion, I be the navigator. I take you to the fishing hole or take you to the woods and find you the spot where I think there's an opportunity, and it's your job to cast the line or pull the trigger. I am a navigator. I am like an architect. I draw up the plans, but I don't build the building. I get you from point A to point B, but I don't fly the airplane. I get you the kill. It's your job to clean it, stuff it, and mount it, kind of thing. That's your job. I just try to hopefully point you in the right direction. Yikes, Swiss franc here. Ugh, that would mean we'd probably run into problems here. Money flow isn't in there, and ADX is ready to turn up. So if we trend lower, it should probably be precipitous, and on here it'd probably be short, sharp, and quick as short covering rally if it gets up into this area. That would mean the dollar has issues. Equities would probably have issues, and people would run into bonds. Brent crude, okay, ADX turned down from this move up, so it's reset again. So it's ready to go for the next trend. Are we going to go higher? All right. Yesterday's video, okay, got you swing up into here. This would be kind of an idea of whacking it with a sledgehammer. But what happens if it breaks out? That was my warning in yesterday's video, that we all know that oil is slanted with too many longs. But it's taking forever for that psychology to fall apart in the marketplace here. So I, prior to everyone else knowing that the market is loaded, had a short bias on this. Watch to see how this, you know, we have a soft GDP, which is also United States shopping season. You know, they don't call it Black Friday for nothing. That's when retailers go in the black. They go 11 months with stuff on the shelves and buildings to heat and cool and labor, and they don't make the coinage until late November, and it comes up to be soft. So we saw that with like restaurants and retail, and I guess heavy trucks and stuff were kind of soft and durable goods. Looked at that on the short side. So things are beginning to play out in the stock market here from what we've looked at. But like I said, I have a defensive stand for the next couple of years on the stock market, even though overall I look for the stock market to double over the next 7 years. All right, but back to Brent. Money flow is in here. The bodies are in here. You can see how the money flow was in here once before, and it rolled over. So I'm defensive nature. I'll treat this, remember these are 2-day bars, as a bear flag. And through here, 55.40 should ding, ding, ding that we get something to slide off. If not, then there may be a spiky area up here to maybe 57.58 from 56. So $2 higher and $1 lower is basically the range. And then the target, if it does slide, would be under 50 into this happy area here. You can see that draw a trend line on here. We're at the upper end of the channel. So, you know, if gold's going down, how come oil doesn't go down? But Kev, you said it can't do that. Don't do that. Blah, blah, blah. Cocoa, money flow is in there. They can't find any help whatsoever. On that one video I mentioned on of the MRCI monthly charts, this thing has still more room to run. You can see the ADX this is on a weekly now. This is pretty precipitous on the run. If you go back to my earlier videos over here, once it crossed, I said short, short, short. I tried to find some areas where there might have been some candlesticks, but they didn't hold because I had bottom fishers come to me. ADX, or excuse me, RSI is down here. Looks like we might be getting some sort of divergence in here. What do we have? Okay, so this is rough looking, but here's the low on the RSI. Okay, so that's there. Here's a higher low, but a lower low in price. That's some RSI divergence. And here's the next one. Here's the RSI, and it's a lower low. So something through here on the weekly, you're going to get probably hard short covering in the cocoa. But Kev, we've been bottom fishing. Yeah, I know. Well, whatever. You know, that's just kind of how it goes. You know, you're going to be a bottom fisher. It's going to be painful. Money's still in there on a daily, and ADX is reset. Where's my stochastics? Or not stochastics, RSI. Kind of cheesy data here, it looks like. Great. Okay. So cocoa, what do we have there? All right, so watch the cocoa. Oh, we may have an exhaustion gap. Oh, well, that's on a Friday. Well, that's interesting. So cocoa. Need to write about cocoa today. That's right. I write for you. Sign up for a free trial. And then I send it out to the subscribers. Coco, what do we have here? Island or exhaustion gap. And I'm looking at a daily. But money flow and ADX. And check out RSI, weekly RSI, bullish divergence. Cool. Subscribers. There you go. Rock and roll ski. All right, so we may have an exhaustion gap here and a little hammer guy here on the Coco here. I'll lean that way for now. We'll check out how much cheap calls are. You can also spread on here too, buy the front month and then sell, the next month over, what have you, deferred. And while I'm still here at the C's, I might also do cotton. Cotton. All right, cotton. Just a trend line up, chop, 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 chop. It's just walking its way up. I believe the commitment of traders is a little bit fluffy, frothy up in here. I'll have to look again. I don't trade cotton, which got me into trouble with coffee. It's not a good read except for the fact that the trend line's pointing higher. Cotton's a different creature. Happy place is at 68. Sideways pattern, breaks out, going at it again. Money flow, there you go. It's just walking its way up. So, think of this here as like what's happening in natty gas too, right? You get a larger sideways pattern, this weekly chart. Money came out of it, went back in, and now we're just kind of walking up. So I suppose, right? Say the long thing if you're long, and then just trail up your stops from underneath here. I like it when it's, what I'm looking for in all of this fun stuff is a larger sideways pattern. Here's multi-year, sideways pattern and a breakout on the secondary. But when you look at where it's at the previous peak, it's not anywhere in particular. So, see how far it gives me. Here's your trend on the monthly, little dots here. Look at that. Keeps you going. This is technically your stop. I would buy if it comes back and hits these. But that's basically what you have going on. The monthly money flow says the bodies are in there. So that has me a little perturbed. ADX is still running. These are monthly though, so these aren't as sensitive. All right, you can see the RSI. The red came up here. Didn't come down to the green. But just I would lean long to sideways here. It's just like natural gas, a larger sideways pattern here. But here's your risk. I mean, you can see, cotton can come down another 20 cents or 10 grand a contract. So defensive, just cautious basically if you're going to stay on the long side. Buy rights, I guess. Buy the cotton, sell the option. You'd sell it in the money too, make a little bit. It was just choppy. It wasn't a good feel, but larger sideways pattern. So, and then this here is what happens when Glencore does not put stops in their on their portfolio. They failed to put in stops, and it cost them billions and a bankruptcy. So yes, professionals do go broke too. I always wonder about that. If you're a professional, how can this happen? But then again, it happens. All right, so, and the best part about commodities is on the flip side, it's a zero-sum game, somebody made money. But this is the quote-unquote bust for Glencore. And bust sometimes can be a verb. We're going to go bust. It's designed to go bust. All right, so cotton. Crude oil, here we go. All right, so we get the pokey, and the money is here. They're coming after it. You got to keep a reversal stop close by here. Oil comes back down. In my eyes, it's going to get a running start down to 45. So there's no hope here if it comes back through the bottom. Because if it's going to do the slingshot deal, this should be it. RSI or ADX is already reset, so it's going to get a trend, either higher or lower. You can see as crude moved higher, the ADX turned up. The money flow went up too, came down, but you can see that there's a lot more money in here now, more money than ever on the chart, but prices can't seem to crack this. So watch very closely for a reversal in oil. Okay, but on the upside we have 54.5 and about 55. 55 would probably whack it again too. This may be like the fifth wave up kind of thing. All right, so little defensive. We do have the ADX turning up on the daily, so it does like the it's going higher type deal. But 55 would probably be it. What's this 50? Double top, maybe poke its head through. So like I said, I'm watching for some sort of reversal on the oil here. What you're going to do is if we have a ton of shorts like they talked about, they're going to have to start covering up in here if they can't handle it. We have 1, 2, 3, 4, 5, maybe up in here. Suppose 55. Faster. That'll work. That'll get me in there. Close enough, couple pennies over the high. You know, triggers, stops are up, and you know, you're short. All of a sudden your stops are up here and it's encroaching. 55 and then 55. Turning up. All right. ADX is turning up, so it's like in the upswing. Keep cautious eye on that. Yeah, what's the swing up here? 54, 52. We played that game yesterday. Where are we? Wherever yesterday is here. Wherever Thursday is here. Wherever the lines were. So the long was 80 cents, 60 to 80 cents, and it went more, but then it came back. We needed to come back below here. So vigilance. Keep an eye on freaking crude oil. 54.50. I have one here close enough. Money flow. RSI, right? Okay, so you know, a couple bucks higher, $20 lower is how I'm looking at crude oil. Dollar, we got the bounce off the blue, which is your ATR. What was it called again? ATR trailing stop. It says modified. Whatever the default settings are, just keep them. Whatever, because it's just all it is a lazy way for Kevin not to have to draw a trend line, right? And this is a trend line. And you're out. This is your stop. You stay short until it's hit. Bounced basically off of this. Went through pivot. Here's R1 up in here, about 101, little under it. The deal is if the dollar comes back through, gold will explode to the upside, and bonds will take off higher. Dollar's correlated strong with higher interest rates. Okay. Basically, how I look at it is the next. I'm not going to treat this as a head and shoulders, though possibility. I'm going to say that if we, clear 101 and 102, it'll go to like 105, 106 is how I'm looking at it. Interest rates continue higher. Right now, but we had a soft GDP, right? So we're looking for, well, maybe we won't hike 20 times this year talk. So that's the thing to play out. So I'm looking for a bounce in bonds then too. ES, here we are today. We got ourselves a little cross. It's an indecision day. I have all these lines here for it to come back. Basically, ADX is turning up, so it does like the swing into higher highs, but you're looking for the risk is a retest back into this 2270s of the upper part here. And what do I have? Daily. All right, so daily would be, this is our sideways channel. All right, you broke out. Retest would be that's how it works. You take off and then you retest. This was a previous spec here where we broke out and we actually came back down and retest. ADX then turned up with the money flow. We went higher. RSI became oversold. We ended up going sideways. ADX reset, money flow came in. All right, what do we have right here? Okay, so here was the post-Brexit high. All right, this is where I said you guys are on your own. You know, la 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 la. Okay, we come down, we come back up, we break out to the upside and come and retest the breakout. It holds. We scoot up to the next one. Like I said, if we coming back through here and crack, this isn't going to hold, this isn't going to hold. More than likely, these aren't going to hold, and we're going to come all the way back down here. And just draw your trend line up against this if you want, but that's how I look at it. The bullish one, and I've talked about this for a while, the money flow isn't here. It was in the NASDAQ, it was in the Russell, it was in the Dow, but it wasn't in the S&P. All right, so on this one, a daily here, ADX is beginning to turn up, so it's liking the swing higher. Money is moving into it. We may have some sort of deal here where we do go into the what are they, like 2320 area here, which is fine. Like I said, the last 10% from 2200 to 2400, whatever, you guys are on your own. You know, all this, but I'm setting up just a defensive portfolio. That's all I'm doing. It's my little thing. So when it all falls apart, I can say, well, you know, I was planning for it. I'm the little ants, you know, because it's the whole run's been going on for a while. I just leave a little bit on the table, you know, just get a little defensive. And because I have to look at it that way. You know, what happens if I'm in charge of an endowment that always, by charter, has to be in the market? You know, I'm technically in the market. But that's here nor there for now. But that's how I have to mentally think here. Because I do not like to see failure, especially from academics. You know, so then I always question their fiduciary responsibility. I mean, how could you not see the real estate thing? Every market's, I mean, come on. I had a girl come into the bar and say that she got 106% mortgage. I was told in the 1970s in grade school that the mortgage would be your biggest liability. Some people look at it as an asset, treat it like an asset, which of course you should. It's first off, it's shelter, food, water, and shelter. So home, she said, I got 106% mortgage, and she was getting $213 an hour plus tips in Arizona, which means that she was making around 20 grand a year. 106% mortgage. What happened to 20% down? And 106, does that mean they give you money for furniture? What in the, well, everybody gets their little spiff by getting the deal done. And we all know it's going to blow up and we're all going to lose our jobs. So we all better have a parachute in our contract. And when it does, it's, you know, they have to fire labor, you know, to manage it. And then we reset the cycle again for another decade. And here we are, 70% through the next decade, new administration, raising interest rates, and trying to get the last of the couch jockeys off the couch and into the workforce, right? So they can have their Social Security go at 2 or 3%. Just joking, Kev. Just joking. All right, so moving on here, the ES deal for today. Let's do it this way. All right, for today, the swing would be in the fresh new highs, cracking 2,300 basically at support around 90, 89, 90. ADX is kind of reset. It's sideways. Whoops, we got the money flow above it here. So any swing higher here, I'd be looking to maybe buy in some puts against 2,300. You know, like I said before on the Qs, next puts would be 127s, as far out as possible here. All right. Money flow is above price here, so that's kind of a short-term caution. Money flow was above price here at the bottom, and it took off, right? Money came in. Buyers were coming in here. Maybe buyers are coming in here to pull it to 2,300. So we'll see about how this plays out today. Like I said, America closes out the business week. Yesterday we left Europe at the highs, right? So why don't we kind of do that again? See if we can sucker Europe into the highs. All right. So that's basically about that. 90. 94 is the pivot area. Here's the happy place for what's on the screen. Yeah, this is it. A poke above here, 2,300. Kind of throw some out on there. ADX, you can see how it moved. It's 2-hour chart. You had the sideways. You had my newsletter talking about never sell a dull market. Hey, what do you know? Ta-da! Now we're up to here, 2,300. Maybe take some profits, write some calls against your longs. The risk is coming back down into the 70s to retest this. It goes up and then farts on over, retests it, and tries it again. That's what I would look for. RSI is up here too on the 2 hours, but it's on a new high. So just it's pointing up. So that's the main trend is up. But I'm looking for areas of, if it comes down here and doesn't hold it and comes back through, well then holy buckets, run, run, run. But I've already started, right? All right, so that's that on the ES. What do we have down here? 2080 as a support level here. And then the 72. All right. Gold. Okay, so gold. Money flow. 20 was the problem. Where did all my little ding 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 dongs go? Ding 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 ding. All right, there's that. You have to clear the 17 to 20 area for it to get back up into the 60, above 55 to 60 area. What's this one? 43, whatever. Bell curve area here, bell curve area here. We're the gold people I was looking for to come down to $10 more, didn't do it. Seems to be holding itself up. Yes, they did write about $1,500 gold. I suppose you could stay long. If you bought in on this week, it's affecting the dollar. The gold and the dollar are pretty much tied together here. I guess you could stay long. I'm going to run into problems a little under 12. All right, what do we have? 30 minutes, how about 2 hours? Give me some more. What do we have? What do you think, Kev? You got an ABC springboard? That's a little bit deep. Yeah, gonna run into problems a little under 12. 98 to 90, so give it a shot here. What do we have? 98. So if you're long, from this morning, you bought, you swiped it down here at the support levels. See a little red here. I guess it's your, triangles, Kev. All right, this is your little red dots is your SAR. Woo! Stop and reverse. So it's now on the long side. All right, so under this, you're going to have to be a little on the cautious side for right now. The deal is I'd have to say if we lose 1140, right, I wrote 1050, but then it's 880 and 681. And on the upside, use your R1 and R2 for a C wave on this if we go higher here to get to 1500. This would be an A wave, B wave, and a C wave would be the 1513 on gold, which would also coincide with a bear market rally and a secular bear market. Bull market bounce, a bounce, and a bear market, but a larger one off a weekly, which would be similar to 1985 to 1987. 1987, though, was a real estate peak. So we may have this spin as inflation going forward. But like I said, in my ideal world, I want to see stocks roll over, debt trade higher, and the dollar come off. And then that would allow for selling of homes into the first and second quarter with lower interest rates, since the Donald took away the quarter point for new home buyers. All right, so the marketplace to sell those homes, they're going to have to bring down rates, and so we need to bid up the market. So punch stocks and then run into debt is my ideal what I'm looking for. Monkey nards. Monkey nards. All right, so here's gold. The flip is here. No, we need to do it this way now. Okay, so gold. Here's pivot. So you may have a minor sideways pattern here where it stalls out at like 91, 92. All right, but treat this as a long side here. 83, and you have to get cautious here. The 20 was it. This was it up in here. One quick one. Here's the money flow. So the money ran with it, pushing prices higher. Money flows came out of it. Prices traded higher, but the money wasn't there. Divergence. Whee! ADX kicks up. Wow, we're in a downtrend, downtrend, downtrend. RSI. Hey, look at me, look at me, look at me. I'm oversold. So we're going to probably get some sort of bounce, but, you know, anything under this here, then we're going to drop another 20 to 40 bucks, 20 bucks into this area. Gold coming below 84, 83. Loses this, then we're coming down to this basically. Is how I look at it. That would be gold. Euro dollars. I thought we'd be running into euro dollars because there's no money flow. ADX is pretty strong. Euro dollars are like T-bills in Europe. So if they hide out there like the beginning of the year, over the beginning of the year, where's the beginning of the year? Oh, it's not on there. What? I thought I had more data than that. Beginning of the year, kind of just traded sideways up in here, but same type of deal. Here's April, May, euro dollars go higher. The front end of interest rates come down. This is the June high, and then came against it. You're moving houses. You have to kind of advertise lower rates. Our rates are lower to buy a home. Oh, let's go with these guys, and that's what happens. And then once the housing thing is done, then they jack up the rates. Stick it to business. You know, what's that? You need to get your merchandise on the shelves. Woo! Hold on, we'll front you the money. So that's how I'm kind of leaning here, is that they run into euros. It would be, I'd consider it short covering rally. If dollars slide through it, I would expect a precipitous increase in interest rates on the front end, i.e. inflationary. Copper. I was looking for some sort of reversal up here, kind of like FCX and JJC or whatever. For me, stand aside is it. I'm looking for more 180, 160 on copper than 320. That's how I kind of want to play it. Still room to run for the money, but, you know, we shall see, right? You know, this was a pretty good move here, but kind of stalled out. So play copper, you know, what did we talk about up here? You know, you have your pivots up in here in the 70s, you know, play a dime higher, but on the downside, you know, you're looking to go back to 220. Okay, coffee. The bodies are in coffee. Okay, so sorry about the bad data. Coffee, I'll go to weekly. All right, so weekly on the coffee, we're getting it kind of making a bottom deal, but the money is in here just like in soybeans. So I'm going to say that this is a larger sideways degree pattern. Coffee is South American. It's the opposite. So this is one of those that doesn't, you know, you'll get a bull market in, say, December and some of that if they have weather issues, whatever. So at Superman 3, it was the corner of the coffee market. How about that? Wow, why is Superman and the bad guys going after coffee? And coffee was screaming, I think, in, 85? So amazing how that is. The bad guy's going to be coffee. Coffee is the number one traded commodity. The number one used is water and then concrete. 3/4 of the planet eats rice every day. ADX turned down when the March higher. This is a weekly, so I'm going to treat coffee as a larger sideways degree pattern. But I will lean that I want to watch this closely for a bull market. And then, but you have to have deep pockets on this because it can drop lower. But right now the bodies are in it, so I'd be kind of a defensive type mode here. And then what about sugar? Sugar, possible head and shoulders on here. The money is in here too, but I have to respect it. 5-wave pattern up off of the low down here. 24 was the sell. Yes, I told you to sell, or at least write options or something. 17 was the deep part that I wanted to get into. We got up to here. Now I wonder and worry about a pullback to the 15s. We're about halfway back here is a C wave. This is A, B, and then C. What's this, 17 again? Take out this low. I have to lean that. I have to just lean bullish for sugar and stuff just because it came off, you know, that kind of thing. But your risk is, you know, you're talking a nickel on the downside versus 4 cents on the upside to break out. So that's your risk reward ratio. I do respect the up on the blah, 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 sugar, but there could be a C wave down to here. And the OJ wrote about lottery tickets on Wednesday on this thing, getting a couple of 2-day hammer. I don't expect Florida to get a freeze, but it's had a pretty good fall off here. So this thinly traded market could be susceptible to sharp short covering. And you could also say that, hey, it's come back and retested this upper part. I just was at the local grocery store, and a 12-ounce can, that would be weight? No, it's traded in weight. It's number of pounds, frozen concentrated orange juice. Now, it was under $1 a can for 12 ounces. So I'll have to figure that mathematically. Something doesn't seem right. Isn't orange juice traded in pounds? So this would be $1.70 a pound, and I got a can for 93 cents. What am I missing here? It's kind of like gasoline. My spread is supposed to be 80 cents, and then it drops to like 40 cents. Like, okay, hold on a second here. Something's not right between the futures price and my local market. This isn't right either. I think OJ's traded in weight. And then it's sold in fluid ounces, 12 fluid ounces in a can. That will be interesting. Write down OJ. I only do this for options on here. Occasionally I'll throw a couple of bucks at it. Looking for the Florida freeze, even though the majority of the concentrate comes from South America. So we're back to the as goes coffee goes OJ trade. Well, that kind of thing. So, but you could say it has come back and tested this. So my deal was, is there maybe, you know, 20 cents higher on here in a short covering rally. So that was my lottery ticket. Moving on, now that I've been doing this for 3 hours and I'm now behind. Swing pass. Oh, that's the E thing. Whatever. Platinum. Platinum. Maybe this is a pause. Money flow. I want to see a weekly though, real quick here. Platinum futures. Money flows out of it. So this may get a swing higher on here, but maybe a larger sideways pattern. Maybe this is the low at $8. I was looking for $1,000 move or $100 move off of here into 1,000. Looks like we finally did that. It said it's a happy place, so maybe there's a swing higher, like with gold. You know, autos, whatever, platinum, yada yada. I believe it's 50 ounces a contract. It's another thinly traded one. But Asia loves platinum. And you have palladium, which is kind of throwing me for a loop for a while. Ooh, hit the happy place and turned. All right, so maybe it's one of those where you buy platinum and sell palladium. Why? I remember this in the 80s at $50 an ounce. Gazowie Batman. This one may be just a, you know, wave down, wave up, and then wave back down. We shall see, won't we? This is palladium. I don't play palladium. I like liquidity. I need to have as many fools as possible in there, so I can include myself, right? Even if you're banging 70%, that means you're still leaving 30% of them as, what was I thinking? The market was pointing up. You know, that kind of thing. Righto. Sideways, we'll say it's a larger sideways degree pattern on here. Money flows out of it, so it is possibly another move up to maybe another $50 higher or so. Clears its happy place. 1,047. The kids will shoot for 50. You can get out at 47. Or hold it longer. Draw your trend line underneath here, then draw the next trend line a little bit higher. Okay, Natty Gas. Oh boy, I wrote that I did a expose yesterday in the middle here, or your middle yesterday about a long thing of Natty Gas. I'll probably make it public here later. We'll see if it comes back down here. But the front months I'm treating as sideways, okay. And I talked about prices coming down. We got into this area, but it was the deferred months. that we're looking a lot bullish, a lot more bullish, bullishist. Hey, we're the bullish. Let's take a quick rundown again while we're doing the whole natty thing. Here's a larger degree natty. This is weekly. You can see the peak, larger sideways pattern for 7 years. And here's where we're at. I could kind of lean at it and say that that was a bear flag or bull flag setting up. We do have 10 months of going higher and a larger degree sideways pattern. We're looking at establishing a position here, accumulating a position for a swing higher. 4.5, 5 and change, and then 6.5, and then I'm looking for 7.5 on this deal. But this is you're gonna get 7.5, 8 probably within the next 2 years. Right here, 6 and change. It's all good. I don't want this is 17-year low. I don't want to be that guy that gets stopped out here. So have your deep pockets if we end up come over the summer or whatever coming through here. We don't clear the upper range. Righto. Let's say March. You betcha. Okay, here's April. Possibility of that ABC wave, and then here we are at the lower end. Possibly come down to 302 on the April. This would be a reversal on the upside. Oh, no, I need to draw a freaking line. That'll work. All right, trend line. Woo, some sort of triangle thing. Where the hell did it go? Great. Oh yeah. Sons of monkeys. Well, where the hell's the end? Ugh, there's never an end. All right, so they got the natty gas. Okay, you had your rollover, so your body's rolled into it, right? Here's your money flow. Only got about this high. Now we're doing the little rollover thing. Here's a little trend line going back from here. This is the trend line off the low. So maybe we do get about $3 on the April here. The reversal would be this. Daily chart, you're looking at 340. So 3 on April. Cracking this trend line then brings it down to the meaty part of the market profile here down here. All right. So if you, like I said before, I think it was 50 on the front end. Comes through here, then you want to be long. A precipitous increase in the angle of ascent. Like the money's rolled in here, so maybe we get something where it comes back down to here, 303 on April. Then we'll go from there. But basically, like I stated, kind of a larger sideways degree pattern. There's the bottom. There's the next low. Maybe we kind of hang around in this area, make another higher low. We made a higher high. Maybe ABC wave down to here, and then take off again. But we shall see. Or natty gas. This is May. Kind of came up there and did the whole fill the gap thing. Now we're back to here. Reversal deal there. Whoops. Set alerts all day long. Righto. 727. Whoopsie, this one doesn't look good. June's already rolled over. This one's so Sunday night massacre. I'm gonna guess that could be in the cards for natty gas. Yeah, so this one's June, so the summer months. So maybe we want to keep an eye on the summer months here around 310 or something. Kind of go, if we're in a bull market, if the drought comes this year, instead of next year like I'm looking for, we may get a spike in natty gas over the summer. So we have to be vigilant and capitalize to be able to come down here and buy some of the, who wants to buy, what is this, June natty gas? I do. If you bring it down in here, I'd be interested in it. And we're back to catching the falling knives. There's a gap down in here, that kind of thing too. Whatever, you got to have the cash. Like I said before, you put up 100%, it's 33,850. All right. To get it down here, we fill the gap with, say, if you put in $30,000 and 4 months later you have $36,000, are you freaking happy? Please say you're happy. And you put in 100% of margin. You don't have to put in the $3,000 or $5,000 or whatever, whatever the margin is on the bugger. You know, what is the margin on June? $2,300. Yeah, you can see how you get yourself into trouble in a hurry. That's a dime. That's 23 cents, and you're blown out of the water. But you have maintenance, so it's not going to take. Widowmaker, sure, you put in your bare minimum, and it's over with by the time it opens up. What the hell happened? Yeah, that's it. So that's only what? That's not even. That's what, 8 cents on the dollar from the total value. 7 cents, 6 cents. To put that in perspective, right? 5% move, it's all gone. That's what, 15 cents, 18 cents, all over with. 2,300. You understand what I'm saying? All right, so, you know, da. All right, gotta move this on here. Ooh, what's this? July natty gas, possible bear flag, ABC, but I'm trading it as a larger sideways pattern here. You know, this, you know, they tested it, and if it fails, then you're going to probably have a washout down to $3. If I can start getting these deferred contracts under $3, I'd be happy camper. September or August, same type of deal. September, same type of deal. 320 on this one here. I'll probably come into this one. Start with September. Look for a so watch this one here. If they start selling off all the other ones, probably start, you know, coming in and scooping some of these up here. All right. October, I would like to see $3. Would be nice. What did I say? Here's 270. But October, there we go, October. This is the beginning of the next heating season, blah, 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 higher highs. Try to go up here. Anything down here, we're going to have a huge unwind. Bodies are in it kind of thing, right? All right, money's coming out of this here on the weakness. So they're beginning to get, they got out of it here on the up. They filled the gap. October filled the gap. So I'm going to say we're going to come down this way here. All right, rock and roll ski. I'm going to get my birthday is October 26th, the same as Hillary and that Australian guitar player. Who else has my birthday? Oh, yes, Seth MacFarlane of the Family Guy, who tried to sell his thing 3 times before it stuck. His Family Guy. Bless him. Perseverance, whatever. He pressed on. All right, natty gas there, and I think that's all of them. This one goes back to Feb. We're coming off the board on this one, so I could probably put November. All right, we have a new winner here, folks. We have November natty gas. Come on down. Come on down. Natty gas, come on down. All right, anything else? All right, sorry about today's delay. That's always a busy thing. Big numbers. You guys will be good anyways. Okay, natty gas. Nikkei, talked about whacking this thing. Possibility of it failing up here. It should break out with the rest of the indexes, right? Kind of looks similar to the we'll say the Dow or the S&P, where it had the ABC slingshot move higher, but any failure, then I'd probably want to be the short side down here to 16.8 from 18.8 is 2,000 points or 10 grand a contract. So margin is 4,800. You know, if you double it, put 10 grand in and go, you know, with a failure, it has to fail up in here, right? I mean, for right now, I have to treat it like a springboard, but it did run up against resistance on here. Where are we at? Down 10, 15, 30. The Nikkei futures is a nice one because it's $5 a point price weighted, just like the Dow futures. So if you like trading the Dow futures, you'll like trading the Nikkei, and I'm on the West Coast, so I like it for dinner time stuff. I also do the Sunday deal too. Yes, I unfortunately work 19-hour days, 7 days a week because I love this. I love it. It's not the money thing, it's the hunt. Just the whole, and then I throw in psychology. You know, it's just, you know, wow, it's up here. Everybody's giddy. And now it's, you know, people are talking out of the side of their mouth and it's going the opposite direction. Those are the little signs I'm looking for. I can tell them they're wrong, but they won't listen. That's how it works, though. Everybody's looking over the same side of the boat. All right, here's RSI oversold or overbought too. I have to treat this like a bear flag for right now. On the Nikkei, where are we at on the S&P? Just open up. We're flat. What do you know? There goes my options. Oh yeah, I got to get out of that. Okay, NASDAQ futures here. Trend is still up. Happy place is, we'll call it 78 from here. The breakdown, probably under here. We're swiping the tops. I got to go look in some cues over here. Excuse me 1 second. Excuse me while I kiss the sky. Cues in the new highs. I was looking for 127s. We're at 126s. So I'll just run on down. Looking for 127s. We'll buy them at, how about 13? 13, good to cancel. Will I get filled? Of course not. Open interest is only 11 and I'm trying to buy 400, but you have to understand I'm working a different angle here. So I'd have to go into the future side of stuff, right? But the market makers are there, right? That's their job. They're supposed to put up, what, 250 contracts for me to scoop up, right? Buggers. I have to fight them too. Bastards. All right, so here we're getting open on it. The Dow's. Let's try this again. The Russell. No, Kevin, stop. The NASDAQ is the only one that's green. The Dow is down 22. The S&P is down 1, and the Russell's down 1 too. Holy buckets, the Kev. Yeah, get with the program. 3 hours of this pretty long show. All right, so swing higher, stops underneath here kind of thing. Like I said, I'm looking for some sort of failure up in here for a retest of the breakout, which would be back down in here, but that's a little deep. That's a little too deep for this swing higher. Yeah, so it's just trailing it up, trailing it up. You're just because it's, are they what did it say? Are they measuring gaps? Here's our resistance here, 2179 and 2180. There's 5179. All right, so we're looking for a double top here for right now on the NASDAQ. All right, here's what. These are, I call orbs, but it's monkey bars, and it just has the day, all the trade. On here, it's just quick for me. This is a happy place, happy place. It comes through the happy place, and I'd expect it'll pause at 51, but I'd probably figure it'd come down to 50.70. So if the NASDAQ loses 51.50, then I'd expect it to come down to 50.70, a quick 80-point drop. So stay on your toes. Sugar, blah, blah, blah. I talked about it already. Just 2-cent drop risk. Silver, that would have to be a swing higher too. We'll see how it pans out with the dollar. Ultra bonds, I'm looking for a swing up into here for all the debt to C wave. This would be A wave, B wave, C wave. I'll move up into here. 66 or 166 to 168 area for the ultra bonds. YM, looking for some sort of reversal here too, or failure. It breaks out and then fails. Whoops, it comes through here and all of a sudden it drops. Now we're down to 1920. What happened to the 20,000? Well, you got it, didn't you? ADX is reset and turning up. It's beginning to like the rollover. I got to get this video out. I did send out the link live, though. Should have done that a little sooner. All right, money flow on this one, on the bonds and stuff, too. Stocks come off. Expect bonds to come up here. 157, 159. People will be talking about 160, 161. And like I said, we're talking, you know, selling homes out to June. So we may get 164 into June. See how that's happening? Draw a trend line on here, and it goes all the way up. And look, here's June, 163, 164, right? But it's going to move at a little quicker clip here, especially if equities roll over, right? Trend line, you following me on that? Trend line up to here. This one will probably pick up angle of ascent. So what do we have? June bonds. Those are March. Where's the June? M7, right, Kev? June bonds. Got a Zowie bet, man. What am I missing here? 30-year bonds, June 2017. Well, that's just fuddy-duddy. 150 on the Junes from 148. Ugh. That doesn't seem right. Fudge packing. 150 from 148 on June bonds. Boy, I just really popped some bubbles now, didn't I? 2 points. Yep, so short the June bonds over 150. All right, corn's coming on. Here's a happy place. I'm looking for corn. We're talking, let's go to 280 here. Looking for corn for 280 here. Let's keep pressing the short side of this thing here. Come on, corn. Just come on down. There's your little flag. Come on down. Take your little money flow with it. There's your little dots for the trend line. Reversal at the happy place like silver and that. Reversal. I want to see commodities come down this year so I can accumulate long positions for the drought. Preferably next year, 2018. As I'm looking for an ABC wave, ABC wave of the 5, same type of deal. Stocks come off, people run into debt and hide. Here's meal. Oh, it's holding up as a flag. And the ADX is moving higher, but the money flow is coming out of it. Maybe some people are listening to my videos. I'm sure it was probably bean oil, which we didn't hit. Oh, look at you! I love that bar. That's just gorgeous. And here's where it's going to trigger the computers to get out of it. So I expect to bounce before it continues lower. Just draw a trend line underneath here. Look out. Hey! You draw it a little tighter. This could be retest of the backside, but I'm kind of pushing it a little much. But yeah, bean oil coming on down. Not much to go now for right now. So put your stop. Make it alarm. Sell some puts if you're short, you know, take some profit or take some off. Okay, same type of deal here too. Hammer type deal, whatever, blah, blah, blah. La, 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 la. Up here, swing on notes. C wave, A, B, C, short, O lower. We're trying to run the economy into the ground, folks. That's what the job is, right? So the 1% and tenth of 1% and millionth of 1% can scoop up all your hard-earned work and assets that you paid top dollar for at a discount. Yep, I fall into that category too. I like a really good deal. I underprice what the herd will actually pay for it, but I'm pretty good what I'd pay for it. Bottom tick. I'm good at that. All right. So me and the Donald have some stuff in common, which is fine. I don't mind the Donald. I really don't. I believe in America. I believe in this planet, actually. That's what I really believe in. But it's like a racehorse, right? All right. Up in here on the beaners, we have the RSI on the ADX come off. Here's the money flow, right? So the money's running into this. So it's susceptible to heavy unwind like corn. I think wheat's also in that camp now. Grains and oilseeds could be a heavy unwind. You can draw a channel line here and here. Happy places around 1018, and I believe we're short from 1067. Remember, that was my birthday. That was the trigger back here. Yeah, I'm looking for, how about 615 beans, but I'll take 850. I'll take 815 beans for right now. There may be some underlying inflation that will never, you know, here's eight whatever, but it goes down to 650. There may be some inflation, you know, there are more bodies, add another billion people, you know, in the last decade, whatever, you know, that there may be some, that we don't see beans under 5 again, kind of thing. Same type of deal. You know, we don't, it's one of the, you know, do we see under $5 beans again? You know, it may even be tough to get it under 8, but we shall see, won't we, going forth? But right now, I'm looking, treating a larger sideways pattern, but I definitely want to start establishing a large position under $8, preferably around 650. $5,000 a dollar. And what's the fund margin for right now? The fund margin is a whopping $2,300. So 23 cents you're blown out of the water, and I'm looking for $4 lower, right? I'm not going to play the $4 lower, even though it's going to be a washout and whatever. My job is to wait for those people that go, oh, to give it to me at a discount. I take it from them, from the weak hands to the strong hands. That's what I'm looking for. 2, same thing up in this area, probably about here, 108.18, 16, something like that. And we're back to the A's. We're done. I didn't hit wheat, though. ZW, each its own. Bodies are in wheat. This is your trigger to go long. I mean, to add, because you are long. Somewhere in this channel. 23 was the lower end here, but bodies are in it. I wanted to start establishing under 4, and it didn't give me as much as I was looking for. So I'm going to go write a song about that. All right. Off and running. Everybody have a wonderful weekend. Next in wheat is about 457 area. We get a swing higher. Money is moving in here on a weekly. Need to see some follow through, then we should be off and running here. And then go from there. 504. Right? Right, 2. Toodles.